Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Tuesday, the 19th of July. Starting off with the FTSE 100, where we can see that it looks like a solid situation, bull flag at and above the 10-day moving average at 66.10. Also, notional support from former initial July resistance at 66.12. Above the 10-day line, effectively above 6600, we're looking at 6800, which is the top of the 2016 price channel. Time frame on that hopefully over the next 2 to 3 weeks at the most. On to the DAX, where it's a little bit more of a struggle than the recent past, but still trying to dance around this 200-day moving average. That's the black line around 10,060. Stop loss and also the line in the sand as far as the bull argument is concerned, back at the 50-day moving average at 98.97, and above that the notional target here as high as 10,400. Initial resistance coming here from 10,104, which is the top of the June gap to the downside. So that may be a signal for aggressive traders to follow. But at the moment, it looks as though the flow will be towards that 10,400 zone. On to the US markets, which have been rampant in the recent past. Still very, very solid at the Dow here. 10,800 the target here, which is this March resistance line projection. That's valid while we hold above the 10-day moving average. Currently at 18,230. So another couple of hundred points to go, a bit more than that, at least for this market. And interestingly, the RSI just at 67, so not overbought at this stage. On to the S&P, and we've been chasing a 2200 target here over the last couple of weeks. That's valid while there's no breakback below the former June 2120 2130 resistance zone. There was also notional support from the 10-day moving average at 2135, and really while there's no breakback below that 10-day line, 2200 looks to be on the cards over the next 2 to 3 weeks, and perhaps even as soon as the end of the month. As far as the Nasdaq is concerned, also looking quite bullish, presumably helped a little bit by the takeover over here in the UK of ARM Holdings, but we're looking for a 47.40-ish target. That was the former December resistance, especially while we hold above the 45.74 high of April. So still decent upside to come, and the market not overbought given the RSI is at 65 out of 100. On to the currencies, and for cable, still in this sort of little range between the 10 and 20-day moving averages. RSI at 41, so the bias is towards the downside still, but we are holding that 10-day average 131.14, and the resistance there 133.75 from the 20-day moving average. Probably best either to trade this range between those two lines or wait for a breakout. Equally quiet for the euro. Here we've got still this seemingly endless dance either side of the 200-day moving average at 110.80, 20-day moving average at 111.11 is resistance, and 110 the big figure, the notional support. So not much to report there. For dollar yen, looks like it's a little bit weaker now, or slowing at least the recovery momentum, but we still have the chance at 107.50, which is the resistance line from January, and the main support here really coming in towards the 10-day moving average area at 103.63. But this stage probably looking for spikes towards 107.50 to sell into, at least as an initial strategy. Finishing off with gold, and you can see here that still dancing on this 20-day moving average area, 1328, recent support down to 1320, and while we're above that, there's a chance of a rebound or a recovery back towards the best levels of the year to date. Big target here up towards 1420. End of day close back below 1320 would suggest that we're heading back towards the 1284 price channel floor of this year's or the late autumn price channel. RSI at 54, so at the moment we're still giving the benefit of the doubt to the long argument. That's it for me. More updates at the same time tomorrow.